Okay, grade 11. Welcome back. I'm glad to communicate with you again. I'm sure that you would all agree that this is a fairly grim situation where I have to communicate from my own apartment, and life is being a bit tricky here in Eco Park. The buses no longer run, and there's only one food shop, the City Mart, that's left open. But other than that, they don't want you wandering around. And if they ever see you without a mask, I tell you, they go crazy. So we have all these security people going around shouting and pointing at you if you forget to wear your mask. So things are getting tricky, but certainly Vietnam has had a history of surviving difficult situations. Ho Chi Minh is a great inspiration for me, and Uncle Ho told me all about getting through difficult times, and I'm sure that he would believe that we will overcome the present situation, and he would expect all of us to rally around the government and to follow their instructions, to not to wander around, to always wear their masks, not to be in groups of many people together. And hopefully this thing will be over sooner rather than later. I went out and bought a microphone, a new microphone from a shop called Hanoi Computers. I don't know if any of you know that shop. It's quite a good shop. It sells almost everything, and they're quite reliable, it seems. I bought a number of things from them. And I'm hoping that the audio will be a bit better. I mean, the last video on my laptop, I noticed that if I was moving to the left or moving to the right, then suddenly my voice was a bit muffled. So I'm hoping that this will help and make sure that my voice is crystal clear. Because as we know from our project that we did last year, that a video project means almost nothing at all unless the audio is good. People don't want to see your face, they want to hear what you have to say. And if you're really unclear, then you're wasting their time. So, for that reason, I decided to go out and buy a microphone, and hopefully, the audio will be a bit better. Some of you have kind of complained about getting a zero. Some of you got zeros on, and I'm starting to move to zeros. Um, Usually the zero comes from if you've handed something in, but it was completely like the wrong answer to the wrong question, or you gave me 10 words or something like that, I gave you a zero. I would strongly recommend to you that you rewrite that, and I will remark it, and I will give you a mark which is related to your knowledge and your explanation of the answer. On the whole, I would say that I'm moderately disappointed with some of the homework. I should say that grade 10, I have 100% completion of all the homework. And so I don't know what's happening to grade 11s. You may think that you're being very cool, or you're playing computer games all day, or some of you told me that you've been preparing for SAT exams. That may be true, but it's not true anymore, and you're still not finishing all the homework. So I'm going to move the missings on the register, and I'm going to move it to zero until things start improving. So get to work, finish the homework, and you can move on. Okay, you got a fair amount of time on your hands now. I think your parents expect you to do your homework properly, and I expect you to do it properly as well. We have a question. So one of you in grade 11 asked me a question about business objectives related to previous handout. And you asked, and I think it's a fairly valid question, why would firms want to maximize customers or revenue when this brings in no increase in profits? Well, that's a really good question. I think I answered it a little bit when I was explaining the whole story about Amazon.com. That Jeff Bezos, he was determined really not to make any supernormal profits. Uh, in other words, profits more than the industry, norm. And he was kind of waiting for the day when the company would be bigger and he could plow back all those profits into the company. He wouldn't even pay dividends on his shareholders, which of course made a lot of people upset, and a lot of people didn't buy his shares because I would say 99% of the investors, what they're looking for is that they're looking for profit. They probably don't even know what the company does as a business, but they just look at the record of profitability and they say, oh, this is a company that I can make some money from. And the sad reality is that, a lot of people would just, go somewhere else. I mean, this is what they call the opportunity cost of investment, where you have choices. You don't have to buy Amazon.com shares. You can buy somebody else's shares and make more money. But Jeff Bezos obviously was a clever guy, because by plowing back those profits and really trying to maximize his customer base and trying to, be the number one in internet shopping, he has become a financial superstar, you could say. And he is one of the richest, if not the richest man in the world. I think his net worth is something like 900 billion, which is much more than many countries have. So for that reason, we can see that in the short run, as a strategy to one day make more profits, that trying to maximize the number of your customers, or trying to maximize your revenue, which is really just the money that the customers are giving you, has got nothing to do with profits at all. That, this obviously is step number one to maximizing your profits. Now, maximization of profits is something that is quite fundamental in the whole concept of what monetarists refer to as Pareto optimality, where they have this vision of a free market economy, and everybody is kind of following their own self-interest, and they believe that somehow this will make society more efficient if everybody follows their own self-interest and maximizes their own profit. Of course, there's a lot of people who would say that all you're doing is promoting greed, and that you're just making society an unbearably selfish society. But other people would just say, no, 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 this is the way that the free market economy needs to operate. If you want to live in a capitalist economy, you have to encourage people to try to make as much money as possible. And so this is these are the alternative arguments that you have in terms of business objectives. The sad reality for a lot of business owners is that the managers don't have those type of objectives, or the workers don't as well, because they're not really sharing in the wealth. And so they would say, well, why should I work my butt off when really the profits are all going to the owner? And so that's why, as I said in the last handout, that if the owners of businesses want to overcome this problem of managers having a different objective than the owners, then you need to get into things like profit sharing, or paying managers in stocks, or shares, to motivate them, to make them feel like they're part of the company. But the bottom line is that there is a distinction between, the owners and the workers, and that contradiction will never disappear until capitalism disappears, and that may take a long time. Okay, so I'm going to get into the handout. It's a fairly straightforward handout. I didn't think it was very difficult. It starts off, if you have it, the It's basically the profit theory. It's all about what is profits all about, and I've given you an example of the graph, so you should probably keep in mind what this graph really talks about. We're talking about the break-even point. If you look it up in the notes or in the textbook, you'll see that the break-even point is really something that if you're running a business, you need to explain to your bank manager what is the point of production that you actually are able to break even. Like if you're making, I don't know, microphones here. If you're making microphones, how many microphones do you need to produce in order for you to make a profit? So, if you made one, that's not good enough, and the bank manager isn't going to lend you any money. And so you need to say, well, I need to sort of sell 10,000 a day in order to break even. And then, in other words, 10,001 that I will be profitable. So the bank manager will take that into account and say, okay, well, how long will it take for you to, sell 10,000 microphones? And of course, the owner doesn't really know, but they lie and they say, oh, well, by next week, we're definitely going to be selling 10,000 microphones. So you can see from the chart, it's a pretty useful graph, and I would advise you to remember it for your exam. The first paragraph is quite important because it talks about the roles of profit in the free market system. Okay, and what I would say is that out of the last 10 Cambridge economics exams, I would say 6 of them have this question. And the question goes, what is the role of profit in the free market economy? Okay, that's a really fundamental question in economics. Okay, why do we always look at profits in the free market, and what does it say? What is the message, you might say, of profit? And as the handout tells you, first it acts as a signal to producers to increase or decrease the rate of output. So obviously, if you're producing something that everybody wants, then you're going to start producing more of those products. I was just reading an article. There's a new camera. There's a new camera on the market called the Osmo Pocket. I'm sure you've never heard of this before, but I was just reading this article in a Asian Economics Review article, and they were talking about this new camera which is the hottest thing, because it has something called a gimbal on the camera so that you can be walking down the street and the camera will not be going up and down, that it will stay very stable. So your videos will look really, really good. And so what they sort of what they noticed was that the gimbal to their side, no, not the gimbal, but the Osmo Pocket was selling really, really well. It's a totally new product. It's a new kind of invention, you might say, and the profits were really, really good. And so what happened, of course, is that the company DJI, I think it is, the name of the corporation who makes it, they told their producers obviously to increase the level of production. So that means that they need to start buying more inputs and to try to get things moving so that they can make more profit. Why? Because they have an incentive to maximize their profit, because that's what they're all about. They're trying to maximize their profit. So if they find that their product is doing well, they send a signal, okay? They say a signal to their producers, hey, start making more because we're making a lot of money. And so this is what they do. And of course, if it doesn't do well, they need to sort of get on the phone and tell their suppliers, whoa, 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 we're not selling many of them. And probably at the moment, with the virus crisis, they're selling nothing at all. So probably they're telling their suppliers, whoa, 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 stop producing, fire all the workers, and we're not going to be making any cameras, for the next 6 months, something like that. Okay, so it's a signal. It's like Profits is like a telephone message saying either produce more or produce less. And it's a really good symbol, a good signal, not symbol, but signal. And it's very effective because in the free market economy, you don't want to end up with any surplus or any shortages. You want to produce exactly what is demanded. And that's what it's all about. And then the second one, which is stated there, is that profit is a reward. It's a reward for entrepreneurial activity, including risk taking and innovation. Okay. Now, the word entrepreneur is a French word, and it really refers to a risk taking businessman. And if you're taking risk, you need to be compensated for that risk. I mean, I wake up in the morning and I know that I'm going to get my salary. Okay, the university pays me whether I lose students or I double my students. I know that I'm going to get paid. Well, a lot of entrepreneurs, including Bill Gates, 40 years ago, he didn't know. He didn't know whether he was going to make any money. So he actually borrowed, I think I've told you the story before, he borrowed $40,000 from his mother, which is a very generous mother, I would say. My mother wouldn't lend me $40,000, but Bill Gates' mother lent him $40,000 on the hope that she'll get her money back one day. And so obviously, if we know anything about Bill Gates, you know that he has enough money to pay back his mother the original $40,000 to start Microsoft. And that was a risk. And you need to be compensated for that risk. I mean, I don't need to take I can sleep really soundly. But people who take risk, they're always worried and they're nervous and they're worried all the time that maybe a virus is coming and is going to kill all their demand. If ever there was a good example of an exogenous effect on production and profits, it is today with the coronavirus. You may have been running your hotel in Hanoi really, really well. You were super efficient. You produce a fantastic quality product. The rooms were clean. The food was fantastic. And suddenly, for reasons that have got nothing to do with you, you don't have any customers. So that's a risk that you're taking. And that risk is something that when you're doing well, you need to be compensated. You need to be paid for losing a bit of sleep. I don't need to be paid extra because I'm not losing any sleep. I sleep very well, thank you. And the sad reality is that people like Bill Gates, although I don't approve of him making billions and trillions of dollars today, which just goes to show that he's not really paying his workers enough because, where does he make his profit? He just doesn't pay his workers what they really deserve, which is the definition of exploitation. And basically it means that, that Bill Gates gets to keep all the money. So for that reason, okay, we can see that profit is a reward for entrepreneurial activity, including risk-taking and innovation. Okay, business growth is strongly linked with the pursuit of the maximization of profit, but in the real world, the business world has other motivations as well. Okay, so we go through the different sort of motivations. Profit is a concept that is reflected by the difference between revenues and costs. Okay, we've given you that formula at least a million times in class, where revenue minus cost is equal to profit. It is maximized at a level of output where the difference between total revenue and total cost is the greatest. Okay, and that's shown in that graph on the top of the page. At this profit maximizing level of output, the marginal costs are equal to the marginal revenue. Therefore, any increase in costs will lower the profit maximizing level of output, while an increase in revenue will raise the profit maximizing level of output. As we learned from our handout on production and costs, in the short run, profit maximizing firms will operate so long as their revenue is greater than their variable costs. Okay, so we divide profits into normal and supernormal, and we also have losses as well. And you should be able to draw those graphs, okay? And I've given you a little bit of space for you to draw those graphs. And so what I want you to do is I want you to draw the graph without looking at your book. And I know that, in your notes it's probably there. There's no reason to cheat, okay? So just without looking at the book, without actually checking your notes, draw in the handout, draw the normal profits, the supernormal profits, and the loss graph. These are three graphs that are super useful when you come down to the final exam. Part of the reason for that is that we always talk about profitability, and we're always looking for graphs that we can kind of add into the answer to kind of complement our response to a question, and this is going to give us bonus marks. We're going to move from a C to an A with no problem if you can actually express yourself with graphs. So this is a huge opportunity to get it right if it is right. And that's why I emphasize practice makes perfect. And so I want you to draw those three graphs, the normal, supernormal, and loss graph on the paper right now, okay? And don't look at your exercise book, don't look at your textbook. Okay, normal profits reflect the conditions whereby the profits are just enough to keep the business from bankruptcy. Now, if you look at the tangency of that average cost curve on the average revenue line, or the demand curve and the price, that is actually tangent to the in a normal profit graph. And you would say to yourself, well, that would mean that there's no profit at all. And as a good assumption, but it's wrong. It actually assumes that you make just enough, maybe even just 1 cent enough to keep you in business. So normal profits, which is the long run for 99% of the businesses, most businesses are not losing money and they're not making fantastic money. They're just kind of getting by, and we call that normal profits. And that's why it's called the long run equilibrium, okay? And that means that in the real world, not in the theoretical world, in the real world, almost all businesses are operating on that level. They're making as much profit as everybody else in the industry is making. Now, the moment you make something really fantastic, and I think I gave you the example of a triple-decker hamburger, in Belgium when I lived there, McDonald's had the Big Mac, and so this Belgian hamburger restaurant decided to make a triple-decker burger, and they suddenly got all the customers. And so, of course, what did McDonald's do? They said, well, we need to do something similar, and they made a triple-decker burger, and within in their in their in their restaurant, and they were able to get many of the customers back. So, the Belgian hamburger restaurant was making supernormal profits, but really it was only sort of in the short run, because in the long run you suddenly discover that this is not going to work out, and we're going to have to sort of create the situation where we try to make profits in the long run. And the sad reality is that McDonald's just copied this company, this other company, and they started making those profits as well. So their supernormal profits was short lived, and that basically they went back down to normal profits. And in fact, just as a little cute story, that was also true with selling beer, alcohol. I mean, McDonald's, nowhere in the world do they actually sell alcohol except in Belgium, because other restaurants were serving, hamburgers and beer, and so McDonald's was losing all their customers, and so for that reason they decided, okay, well, we need to sell beer as well. So if you go to Belgium, you go to Brussels, and you go to McDonald's, you can order a beer if that's really And a good thing for you, I don't know, but I mean that's an amazing story because that shows how McDonald's is prepared to follow the leader whenever they think that they're going to lose market share. Okay, you can see supernormal profits refers to the condition where your profits are greater than the typical profit made in your industry. So if you are a potato farmer making supernormal profits, then you are probably creating some value added. You're doing something to those potatoes because the reality is that potatoes are something that is homogeneous. There's no difference between your potato and my potato, and that Farmer Huang's potato or anybody else's potato is the same potato. And so it's very difficult to kind of charge extra unless you've done something to the potatoes. So, you could, peel the potatoes, or you could clean the potatoes, or you could deliver the potatoes. And by so doing, you could make supernormal profits. But of course, the moment you do that, everybody's going to copy you and you're going to go back to your normal profit level, which is sad, but because it means that, it's difficult to innovate and spend money on research and development to try to make your product a bit special, to add value to your product in order to make supernormal profits, if other people who haven't spent that money suddenly start copying your product. Okay, that's the sad reality of life that we live in today. Okay, and then finally the loss graph that I want you to draw as well. And the loss graph should obviously have the average cost curve above the average revenue line, which will be the flat one. So it shows that if the costs are above the revenue, then you're obviously making a loss. And the amount of that loss is from the bottom of the average cost curve to the line, and just shade in that whole area there, and you can draw the loss graph. Make sure that it's properly labeled, and make sure that you don't check, don't look it up in the book. I want you to be able to do this all by yourself. Okay, so the homework is really based on a case study. I've taken it right out of an economics book that uses questions from past exam papers. It's a fairly good case study related to the steel operations in Europe. And they ask a question: what was the percentage fall in demand for steel in Europe from 2007 to 2009? Show your calculations. That should be pretty easy. Okay. There isn't a lot of math, really, is there, in economics, other than percentage increases and percentage decreases. And we know that from elasticity issues and that sort of thing. But on the whole, it's mostly statistics that we're involved with and trying to make some meaning from numbers. Okay, like, if we tell you that the gross domestic product has actually gone down by 3%, what does that really mean? So it's really kind of finding meaning in statistics. Explain, using the steel industry as an example, what is meant by profit. So with reference to the story and steel, tell me what profit is all about and what it is used for and why is it necessary. Explain why in the short run a steel manufacturing firm might keep on producing despite making losses. Okay. Now, they're only going to do that in the short run. Nobody can actually keep doing it in the long run. You do have big companies like Pepsi, for example, that could probably make losses for a couple of years before they start making a profit. But there are not many companies that are prepared in the middle term to be making losses. So it's always that they're in the short term, short run, they actually are prepared to make losses, sometimes as a means of, breaking into a new market. And of course, that's what Donald Trump is accusing the Chinese of doing, is making losses in selling, as I always use the example, tables and chairs in Walmart, that China can actually somehow survive selling a table and a chair for $1. And of course, what that does is it totally destroys the American furniture business. And there is no way that, United States can survive. And so a lot of people lost their jobs and they become very resentful. And that's why resentful, angry people will vote for a crazy person like Donald Trump. So that's probably why Donald Trump won the election. But of course, we're all hoping that he's going to lose the next one. Then finally, evaluate whether further closures of steel plants in Europe were inevitable. Okay, inevitable really means like, is it predictable? Like, is it sure that further closures will happen? So the word inevitable is kind of a fancy way of saying, is it sure that steel plants will continue to close? So that's a good question. There's no absolute answer, yes or no. So it's using your knowledge and your opinion. Give me an intelligent opinion, and I'll give you a good mark. Okay. So I think that's all for now. I don't want to go on and on and on and on. Some of you have actually answered this handout before they even saw the video. So please don't do that. I give you normally the handout by Friday so that you can have the weekend, and then you can get the new video on the following Monday. So when you see this video and you have the handout, this is when you need to do your homework. So starting today, Monday, I want to see lots and lots of Google Classroom uploads for the homework. Okay? So stay safe, wear your mask. We love you all. Even those who don't do their homework, we still love them, but we worry about you because you're not going to survive the Cambridge exams if you're going to ignore the homework. And your parents will be disappointed, and the administration will be disappointed. And you'll want to have a kiss from your mother, don't you? So if you do badly on your homework and you do badly on the final exams, then your mummy's not going to give you a kiss. And you don't want that. Okay, so bye-bye for now. We'll speak to you next week. Bye-bye.